Hello and welcome back to Simple Money, the show where we explore important personal finance topics in short and informative episodes. I'm your host, Matthew Seawick, also known as the Friendly Financial Coach. So far this month, we've explored the basics of taxes and how tax credits and deductions work. So this week, we're going to give the rundown about doing your own taxes and about community tax centers. So as a financial educator, my dream is that everyone can be self-sufficient with their finances. This includes taxes. Empowering yourself to do your own taxes is a massive accomplishment and one that can save you money in the future. Doing your own taxes also allows you to make choices where you can maximize your tax credits and tax deductions. Admittedly, there are cases where accountants can give you a larger return by knowing how to maximize your deductions and tax credits. This is especially the case if you're a small business owner. However, in many cases, we can do all the work ourselves at a fraction of the costs and still get the same results, especially if you just have a simple T4 and some minor expenses. To make things even easier, we live in an age where it's very simple to do your own taxes. Online tax file services are so much simpler and accessible than the old, boring paper version. So to do your own taxes, the first thing that you'll need to do is collect all of your information. You'll need to record all your income earned during the year. This includes all employment income, tips, self-employed income, pensions, disability payments, EI, investments, and more. You'll also need to collect any expense documents to support your tax credits or deductions, such as RRSP contributions, medical expenses, eligible childcare expenses, rent, property taxes, and more. Now with online tax filing options, you then simply just plug all the values into the software and they will automatically do all the calculations for you. This includes applying for all eligible tax credits and benefits. My big recommendation is to read through the available tax credits and deductions to determine if there's any other options for you to save on your taxes. Another thing too is that if you file your taxes with a spouse, then online platforms can maximize the exchange of tax credits and deductions between spouses, and this can lead to greater savings. So the biggest companies that do online filings are UFile, TurboTaxes, Simple Taxes, and online H&R Block. Many of these companies also have promotions where you could file your taxes for free, such as if your income is below a certain amount, if you're a student, if you have a simple tax return, or other reasons. Now, if you don't feel comfortable doing your own taxes, then you may be able to go to a tax clinic where they can have a volunteer do your taxes for you. Tax clinics pop up all over the country during tax season to really help vulnerable households complete their taxes. It's very important that these households complete their taxes because often they will become ineligible for certain benefits and tax credits that they are entitled to receive. So typically, tax clinics have restrictions on who can receive their services. Often, individuals will need to have earned under $25,000 or $30,000 a year, and couples will be limited to about $35,000 to $40,000 a year. The exact amount is decided by the tax clinic itself. These tax clinics will typically also not help in situations where you have self-employed income. So if you do decide to go to a tax clinic, you'll be required to bring in all income and expense information. You can do a simple internet search and you'll be able to find a location that will work for you. When you actually find that location too, you can find out what documents they require and what restrictions they have. So that's it for today. Hope that you enjoy the episode. If you have any questions or comments, you can reach me on Twitter at ffcoach, or you can email me directly at info@ffcoach.ca. Talk to you next week.